More than just business news, we're news for business people.
Good morning, this is Daybreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Asian markets rise for the first time in more than a week, taking a cue from Wall Street's blockbuster Monday. North Korea's Kim Jong-un pays a visit to China ahead of his meeting with Donald Trump. The government plans to borrow 2.88 lakh crore rupees in the first half of 2018-19. That's over 20% less than the first half of the current financial year. It also plans to borrow money for a shorter duration. And ICICI Securities trims its IPO size after receiving a lukewarm response from retail and high net worth investors. Turning to the international markets now, and US stocks closed sharply higher on Monday, bouncing back from their worst weekly losses in 2 years. The S&P 500 and Dow climbed by a similar amount, while the Nasdaq ended 3.3% higher. Bloomberg's Abigail Doolittle has this report on what turned the tide on Wall Street on Monday.
Stocks rallied in a big way in Monday's Wall Street session. The Dow, S&P 500, and the Nasdaq all climbed by 2.7% or more for the best day since August 26 of 2015. Really pretty impressive. Of course, a rebound rally here, considering that it comes after 2 weeks of intense selling pressure for the major averages, last week being the worst week for the Dow, S&P 500, and the Nasdaq since January of 2016. So 2018 then is all about volatility. These whipsaws up and down as neither the buyers nor the sellers have taken control yet. Now, relative to Monday's rally, it was broad-based as well as being sharply higher and strong, considering that 11 of the S&P 500 sectors did climb higher, led by tech and the financial sectors. Now, relative to technology, Microsoft was a big winner there, up more than 7.5%. Of very bullish comments from Morgan Stanley, which raised its price target to $130 per share, street high. We also had the likes of Apple and Intel climbing higher, and the FANG trade. Now, some of the FANG trade is actually consumer discretionary space, that is Amazon and Netflix specifically, but Facebook, Amazon, Netflix, and Alphabet all climbed. And for Facebook, it's pretty notable because most of the day Facebook was lower, but right around the time of the close, climbed slightly higher, modestly higher, of about 0.4%, even as the company continues to struggle with a data crisis. So when you put these big stock gains, again, the best day since August of 2015, together with the fact that Haven bonds sold off, Monday's Wall Street session was very much risk on. In New York, Abigail Doolittle, Bloomberg News.
And that respite from selling pressure is evident in the Asian markets this morning as well, with the Nikkei in Japan leading gains at about 1.9% higher. The Chinese markets are just opening up, so we'll get you updates on that in just a short while. But before we do, let's turn to the Indian market and give you the trade setup for the day. Darshan Mehta is here to tell you all about that. Morning, Darshan. So the bounce back is evident across the board.
Yes, that's what we saw, Alex. Yesterday, surprisingly, it was this big 100-point rally that we saw in trade that surprised everyone. Today, the global cues are much more supportive, and the SX Nifty is indicating a gap-up opening of 35 points. Whether it'll sustain or no one knows. But nevertheless, at this point of time, it seems that it will sustain. Let's see how the ADRs panned out in trade. Most of the ADRs managed to end higher. Vedanta was up 4%. Tata Motors, HDFC Bank, and ICICI Bank also managed to rally in yesterday's trade. Infosys, Dr. Reddy's, Wipro. So all the ADRs ended with a positive bias yesterday. Crude is again doing well in morning trade. We are above the $70 barrel per mark as far as Brent is concerned, and WTI is closing in on the $66 barrel per mark. So losses coming in, minor losses coming in trade overnight, which has been actually recouped by the gains that we are seeing today. Most of the stocks or most of the metals on the LME also ended with a positive bias. Aluminium was flat in trade, but zinc managed to rally almost 1.3%. Nickel was flat in trade. Lead managed to rally 1.9%. And tin was up almost 0.5%. So strong cues coming in. Even in China today, the cues seem to be on the positive side. You can see zinc is up another 1.7%, and steel is trading up almost 1.4%. Aluminium is trading up by 0.5%. So that's the cue that's coming in. Most of the precious metals are trading muted at this point of time. As far as fund flows are concerned, big amount of buying had happened by the DIs yesterday. FI has bought in 740 crores, but look at the DI buying 2,000 crores of buying. But remember, we're coming to the end of the financial year, so a lot of this fund flows may be because of maintaining the NAV. So there is that's why a lot of mutual funds may be buying into the market over the next few days. As far as the indices are concerned, the mid caps managed to rally, the small cap didn't rally as much. The Nifty Bank managed to rally 2.5%, but the star of yesterday was the PSU banking index, which was up almost 5% in trade. Media index also managed to move up almost 3.5% in trade. Now, as far as the VIX is concerned, VIX was down almost 2% since the market managed to rally. But if you're looking at the Nifty overall, the Nifty was up 130 points. HDFC Twins, SBI, ICICI Bank. So the financials were the one that led the rally in trade yesterday. IT saw selling, oil saw selling. So Infosys, Wipro, GAIL and HPCL, all of them saw minor selling. But clearly, everything was there on the gaining side yesterday.
What are the FNOQs ahead of expiry, Darshan?
Yeah, so expiry is tomorrow, since this is a truncated week. What we saw was a huge amount of short covering. Look at the open interest drop that is there. 25% is the open interest drop, and the index moved up almost 1.3%. So this is a bout of short covering that has come in. Even on the Nifty Bank, look at the open interest, it's down almost 14%. Clear indication that there was short covering that was seen and fresh positions were not taken on the market. Now, yesterday, if you're looking at it, put writers have become extremely aggressive at 10,000. They took even positions at the 10,100 mark. So they're defending levels of 10,000, 10,100, which will now act as very, very strong support levels for the market. And call writers were shifted to higher levels. Now, if you see yesterday, call writers maybe have to shed positions. Look at it. The 10,000 and the 10,100, significant amount of positions were shed in open interest, and put writers became aggressive. That means the bulls have become much more aggressive at levels of 10,000 and 10,100, and since it's expiry at high levels, positions were getting shut. Now, as far as the Nifty is concerned, look at the jump on the PCR from 1.04 to 1.14, and on the Nifty Bank 1.04 to 1.21, indicating that there was strength that was seen on the market yesterday. As far as the rollovers were concerned, as far as the Nifty rollover is concerned, it's currently at 40% and 40%, and if you're looking at the Bank Nifty rollover, it's currently at almost 24%. So that's the rollover that we are seeing in. As far as the FNO ban is concerned, JP Associate is the stock that comes into the FNO ban, and stocks that go out of the FNO ban are HDIL and IDBI. These are the two counters that go out of the FNO ban. Some of the stocks in focus: Oil India yesterday saw fresh shorts on high open interest build up of 18%. The other one was JP Associates, short covering rally seen. Open interest was down almost 12% on the counter. You had Grasim, which saw long unwinding. Open interest was down 12% for the counter. And finally, some of the stocks in focus. Look at the MRF OI decline. So it climbed up 1% on huge amount of short covering that was seen on the counter. And Canara Bank was one of the counters that again gained on back of huge short covering that came into the markets.
Thanks so much for that, Darshan. Let's move on to another market now. We're talking about the bond market. The 10-year benchmark, remember, has surged significantly in this current year in 2018. It's currently hovering around that 7.6% mark. Now, the Indian government plans to borrow 2.88 lakh crore rupees between April and September in the upcoming fiscal. The Secretary of the Department of Economic Affairs, that's Subhash Garg, said that the net borrowing would be around 2 lakh crore rupees. Nico Jori has this report detailing the government's borrowing in the first half of the next financial year.
The government's gross borrowing for the first half of the financial year beginning April 1 would be 2.8 lakh crore rupees, which is about 47% of the government's total gross borrowing plan for the next financial year. On net basis, the government would borrow about 2 lakh crore rupees in the first half of the next financial year. The government has decided this time that it would use additional 25,000 crore rupees from the National Small Savings Fund to fund its fiscal deficit, and would reduce the buyback of government securities by rupees 25,000 crore rupees, which would then bring down the government's gross borrowing number for the entire financial year by about 50,000 crore rupees. Now, this would, however, not have any impact on the fiscal deficit, a government official told reporters. The government has also decided that it would come out with shorter term securities in the 1- and 4-year bucket.
Well, as you've probably noticed, there are some key changes with regard to the borrowing calendar in the first half. And what are the implications of that, and what are the reasons why those changes have been made? Well, Ira Dugal explains all of that in this report.
The borrowing program announced by the government today has come against the backdrop of a particular market, and that market is well summarized in this one chart. Between last year, at the start of the fiscal last year, and this year, you've seen almost 100 basis point increase in the 10-year bond yield, and the borrowing program today tries to prevent a further upside in these bond yields, which can be very detrimental, not just for the government's finances, but also more importantly for the economy. So the government has done two things. One, it has addressed to some extent the near-term supply-demand imbalance in the bond markets by reducing the first half borrowings. Only 2.88 lakh crore being borrowed in the first half, as you know, and that's less than 50% of the total borrowings. So typically they would front load the borrowings. This year they're actually not front loading the borrowings in the hope that the second year market conditions will be a little bit better. The other thing that they have tried to address is the oversupply of 10-year bonds in the market. And Swamijit Niyogi of India Rating explained this to us well, said that 40 to 45% of the central government bonds are in the 10-year bucket, and about 70% of the state government bonds are in the 10-year bucket, which then means that this one benchmark bond tends to see a steep sort of change in the demand-supply dynamics when the demand from banks reduces as it has now. So the government has tried to address both the immediate sort of demand-supply imbalance overall in the government bond market, and then the demand-supply imbalance in the 10-year bucket by changing the short-term tenure of the bonds that they are borrowing. They will be borrowing more in the 1 to 4 year bucket in particular, and then in the 5 to 9 year bucket as well. Those are two things that the government has done to address market concerns. Will this mean a short-term downside in bond yields? Yes, most market participants said that tomorrow they should see a positive reaction on the bond yield side. But I just want to caution that do not expect bond yields to come off very steeply, and the next chart will explain why I'm saying this. Now, remember last year, through most of the fiscal year, you had a surplus liquidity scenario. This is the banking liquidity indicator compiled by Bloomberg. This is the neutral line, and anything below that suggests surplus liquidity. So through most of last year, the government was borrowing between 15,000 to 18,000 crore per auction amidst surplus liquidity. Still, bond yields moved up. Now you will be in a scenario where they will borrow lesser, 12,000 crore in the first half of the year per auction, but they will be doing this borrowing amidst neutral to deficient liquidity conditions. So while there could be some downside in bond yields, you would not expect a correction all the way back to the levels that we had seen at the last start of the last fiscal year. The reason for that being that the liquidity scenario has changed as well. All the demonetization liquidity has flown out. The gap between deposit growth and credit growth has widened. Credit growth has picked up. Deposit growth has come off. So all of that will mean that pressure on bonds, or at least relatively higher bond yields, will persist.
Well, let's shift focus now to the commodities market, and Jayesh Khilani joins in with all the details there. Morning, Jayesh. How's it looking?
Morning, Alex. So oil prices are currently trading with a mild positive bias after slipping about 0.5% overnight. Now, this is on the back of, or despite the fact that there are some geopolitical tensions that persist in the market. Iran was said to have launched a missile attack on Saudi Arabia, and in a response, Saudi Arabia has mentioned that it has in fact intercepted 7 ballistic missiles. That was the negative for oil markets. But as far as the inventory data is concerned, this time around, a Bloomberg survey expects that the US crude oil inventory would likely increase to the tune of about 9 lakh barrels for last week. Mixed cues coming in for the oil market. As far as base metals are concerned, we saw that the base metal index on London Metal Exchange, that closed lower for the third straight day. All metals except for copper gained on London Metal Exchange. However, if you look at COMEX copper, that has actually opened about more than 1% higher. LME copper ended about 1% lower. That was down about third day in a row. As far as other base metals are concerned, zinc and lead gained more than 1% each, while aluminium, nickel and tin closed marginally higher. Shifting focus to the precious metal space, we are seeing some bit of uptick for gold and silver prices as the US dollar has lost some ground.
Thanks for that, Jayesh. Let's move on now. One of the first Indian microfinance lenders to get a universal bank license, that's Bandhan Bank, is now headed to the bosses. After raising 4,473 crore rupees through its IPO. Bandhan will list on both the NSE and the BSE today. Shraddha Babla is standing by to tell us more about the lender. Shraddha, where does it stand in terms of size and how does its balance sheet stack up against its peers?
Bandhan Bank will be valued at 44,700 crores, assuming it lists at its issue price of 375. So that in fact places it much higher than any other PSU bank, listed PSU bank in this country, except for SBI also. So of course its market cap will be much higher. Even there is closest comparable peers like RBL Bank, Federal Bank or IDFC Bank for that matter, and probably closer or more comparable to the likes of Yes Bank. Now let's see how its operating parameters have done. Now if you look at the loan book size, it has nearly doubled from 12,000 crores at the end of FY16 to 23,000 in 9 months FY18. Deposit growth also has been significant to 25,000 crores at the end of December 2017. So the bank has actually been able to scale up its balance sheet post the conversion to a bank pretty quickly. So if you compare, so we saw that Bandhan Bank ranks quite high in the pecking order as far as the market capitalization is concerned. But if you compare the asset base of the bank, you will see that Bandhan Bank's about 25,000 crore loan book size is lower than that of IDFC Bank and RBL Bank, but much higher than that of Equitas or AU Small Finance Bank, both or all of these which are microfinance or NBFC turned banking entities. The good part is, even if you compare the asset quality, it's much more stronger and healthier. So Bandhan Bank's gross NPA stood at 1.67% as of December, comparable to what some well-performing retail-oriented private bank is doing, because in case of some of the other microfinance turned institutions, all those NPA numbers are more than 2 or 3%, but this one at 1.67%. If you compare some of the other parameters like net interest margin, again Bandhan Bank's margins are amongst the highest in the industry. Look at the CASA ratio, 33%, so that is comparable to that of what RBL Bank has done and what IDFC Bank has failed to do. Both were launched at around, both got the banking license around the same time, but Bandhan's CASA ratio has been at 33%, while IDFC Bank has failed to sort of be able to scale that up. In terms of the cost to income ratio, Bandhan Bank again stands out once again with a ratio of 35%, and that's the lowest amongst whether you compare it with NBFC or microfinance turned banking entities or even some of the banks, because even something like a HDFC Bank would have a cost to income ratio in excess of 45%. So they have been able to control their costs extremely well despite the branch network expansion. Return profile also is superior, so they had a ROA of 4.5% and ROE of 28%. This is as of FY17, and of course those numbers could come down post listing, but nevertheless the ROE analysts expect will come closer to that 20% number. Nevertheless, they will remain higher as far as that industry average is concerned.
Well, Shraddha, lots of comparisons have been drawn there with regard to its peers, but how do we really classify it? Do we call it a universal bank, or do we call it a microfinance lender turned small finance bank in comparison to the others that have turned?
Well, yeah, that's a tough one to answer because Bandhan Bank's price to book ratio, post issue price to book ratio based on the 9-month FY18 numbers stands at 4.9%. That's asking for valuations very close to what a HDFC Bank or a Kotak Mahindra Bank are actually trading at. It is significantly higher, or will seem more expensive as compared to its peers like RBL Bank, even Ujjivan Finance, Equitas. All of these trade closer to 2 times, an IDFC Bank at just 1 time its price to book. So clearly it's a mixed picture as far as those valuation numbers are concerned. It's somewhere in between what a good retail oriented bank is doing and what some of the small finance banks are trading at. AU Small Finance Bank, of course, is an exception, trades at 7 times price to book. Now, if you talk to some of the dealers, what they're saying is that they're expecting a listing at a premium of about 35 to 40 rupees, which means that it could list at anywhere between 410 to 415 if they are to go by. If that were the case, if it lists at about 400, the market capital, the implied market capitalization will be 47,000 crores, and the price to book ratio goes up to 5.2, and at a listing price of 420, the market cap rises to 50,000 crores. That's how big a bank this will be, and the price to book valuation will turn out to be 5.5 times, so making it extremely expensive. Nevertheless, analysts always seemed bullish on this counter, and especially from the long-term prospects on account of those kind of superior CASA growth margins and return profiles that the bank has shown so far.
All right, Shraddha. Moving to a problem that some of these microfinance lenders, actually all of these microfinance lenders, haven't had to contend with. That's big bad loans. The fight for SR Steel rages on, and ArcelorMittal, one of the interested companies, says it will challenge the lender's decision to disqualify its bid. Vishwanath Nair gets all the details for you in this report.
ArcelorMittal India has decided to go to the NCLT challenging the SR Steel lender's decision to call its bid ineligible. According to ArcelorMittal's statement that came out on Monday, the company is trying to protect its rights under the insolvency and bankruptcy process to bid for SR Steel. The problem started because ArcelorMittal was classified as a promoter for Uttam Galva Steel, which is already a stressed company, an NPA company with a number of banks. According to an amendment that was brought in by the government in November 2017, any promoter of an NPA company cannot actually bid for an asset under the insolvency process, which essentially means that ArcelorMittal would be barred from participating in any process. But in its statement, ArcelorMittal claims that it has received some kind of confirmation from the stock exchanges declassifying it as a promoter for Uttam Galva Steel, which means that it is still eligible for this entire process. Remember, ArcelorMittal's move comes in right after what happened with New Metal. New Metal, which is the other bidder in the SR Steel case, had filed a motion at the NCLT in Ahmedabad seeking some kind of declaration of eligibility from the NCLT in the SR Steel matter. The petition claims that New Metal's application or New Metal's submission of resolution, its submitted resolution plan has not been adequately assessed by the resolution professional involved. Therefore, New Metal is trying to get some kind of intervention from the NCLT. The NCLT on its part ordered that the resolution process can continue as it is going on according to the regular timelines, but that whatever NCLT decides in this matter will be binding on the lender's decision, which will be taken out later. On the 2nd of April, that is when the lenders have called for rebids in the SR Steel case, and it is said that all 6 participants who had originally submitted the expression of interest would be asked to submit a fresh plan by that time.
All right, Shraddha Babla is back now with the stocks in news. Shraddha, what are the stocks that are likely to be buzzing on account of being in the news?
Well, Alex, there are a couple of order wins given that it's the year end. So Punj Lloyd has received a EPC order worth 500 crores. You have KNR Construction, which has bagged 2 hybrid annuity model projects worth 2,964 crores from NHAI. Dilip Bilkon has emerged as the lowest bidder for 4 new road projects in Karnataka and Maharashtra, which are worth about 4,100 crores. You also have a Dolphin Offshore Consortium, which has won orders worth 154 crores from ONGC. So, of course, those will be some of the names you will be watching out for on the back of order wins. Then you also have names like Precision Camshaft. It's a smaller company, but they've said they will acquire 76% stake in a German-based company. They haven't disclosed the financial details of the deal, but we will watch out for that name. Tata Metallics, which has said that operations will be impacted on account of the shutdown of one of the blast furnaces at its Kharagpur plant. Also a smaller name like Arihant Superstructures, which has signed a MOU with CITCO to develop affordable housing projects around the Navi Mumbai airport area. And lastly, on the back of bulk deals, we're tracking TCPL Packaging, where renowned investor Vijay Kedia has sold 1.1% stake on 98,000 shares yesterday, whereas Wigner Holdings Private Limited has bought 1.1% stake. So watch out for that name as well.
All right, Shraddha. Moving on to the big international update for you. The US, European Union, Ukraine and Canada have jointly expelled more than 100 Russian envoys in response to the nerve agent attack on a former Russian spy in the UK. The US, in its strongest action against Russia under Trump, is said to have accounted for 60 of those. Russia, for its part, has said that it will retaliate. Kevin Cirilli of Bloomberg News has this report and how this could affect the relationship between the erstwhile Cold War rivals.
In addition to expelling those 60 what the U.S. would consider spies, they are also shutting down a consulate in Seattle. This coupled with what happened in the last month of former President Barack Obama's administration, where they shut down a mansion, a Russia mansion in Maryland, as well as an entity in New York. So this is a continuation of that U.S. policy, and this is the most aggressive stance that we've seen taken. Now, senior administration officials telling Bloomberg News that in addition to that, the president ultimately reached that decision after his phone call with Vladimir Putin last week. They did not discuss this on that phone call. We should also note that the president did consult with NATO allies. This is part of a much broader effort on behalf of this administration, and comes at a time in which the intensity surrounding his relationship with Russia is under the microscope, to say the least.
Well, reports suggest that Kim Jong-un is on a surprise visit to China. This will be his first known trip outside North Korea since taking charge in 2011. Media reports in Japan back up the story. Bloomberg's Stephen Engel has this report from the Tokyo studio.
Yeah, I think there were probably some people in Beijing knew he was coming, because he did have to take that train, which is quite a unique train, very similar to the one that his father used when he made trips to Beijing. He had to cross the border there at Dandong from North Korea into northeast China and then on to Beijing, where they park it at the Beijing railway station. So it's kind of conspicuous. You can kind of tell a high-level official from North Korea is coming. What we don't know for sure if it is, in fact, Kim Jong-un, but 3 people close to the situation can confirm that the North Korean leader is in Beijing. Why would he go there now? Well, of course, ahead of the potential or the possible summit, if you want to call it that, with President Trump at a location yet to be determined. The Chinese obviously don't want to be left out of the consultation phase of this, and also they want to kind of gauge from Kim Jong-un what his strategy is in going to talks with Trump and what he wants from the United States, whether he is sincere in his pledge, of course, to that he's willing to abandon his nuclear weapons program. But it is an interesting new twist in what is becoming a very interesting saga, with the potential meeting as well between Moon Jae-in, the South Korean president, and Kim Jong-un coming up slated for early April.
Well, meanwhile, trade talks between the US and China are still ongoing. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories that you can find on the website bloombergquint.com. Here are just a few of them. ICICI Securities has reduced the size of its initial public offering after shares set aside for high net worth and retail investors were not fully subscribed at a time when volatility rules the roost. Nearly 88% of the offer was subscribed after the IPO window was extended till 8 p.m. on Monday for retail investors, according to the latest data available on the NSE website. Now, Facebook chief executive Mark Zuckerberg was invited to testify before the Senate Judiciary Committee next month by Chairman Chuck Grassley as questions mount over its data privacy practices. Well, that's all we have for you on this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.